Opendoor stock just closed out Thursday's session with real strength, climbing by 86 cents, or 10.45%, to finish the day at $9.09 per share. Intraday, it even touched as high as $9.21. For a stock that just a few days ago was fighting through one of the roughest stretches in recent memory, this rebound is both significant and symbolic. After 4 consecutive red days and heavy institutional selling, today's price action reflects something more than just a bounce. It reflects a shift in narrative. So let's break down what's driving this new momentum, why Jane Street's 13G filing is a watershed moment for Opendoor, how Lennar's earnings show institutional exposure is broader than people realize, and why the Open Army deserves real credit for sticking through the storm. First, let's start with the obvious headline, Jane Street. Earlier this week, we learned that Jane Street, one of the most sophisticated, secretive, and influential quantitative trading firms in the world, has disclosed a 5.9% stake in Opendoor, amounting to more than 44 million shares. This disclosure came through a 13G filing and immediately sent ripples through the market. To put this into perspective, Jane Street is not just another hedge fund. This is a trading powerhouse that handles roughly 10% of all equity trading in North America. They are known for their ultra-fast, algorithm-driven strategies. They do not chase hype. They do not waste time on stories that don't add up. They run data, they run probabilities, and they put their own capital to work when their models flash green. And this week, those models clearly flashed green on Opendoor. It's also worth pointing out something else. Jane Street was previously flagged as one of the institutions with short exposure to Opendoor. So if you've been following along for the past few weeks, you'll remember that retail frustration wasn't just about anonymous shorts out there in the ether. Jane Street's name was literally on the list. Which makes this development all the more fascinating. If they were previously short and are now long with a nearly 6% stake, that means they not only had to cover those short positions, but they flipped their book entirely. Covering alone adds buying pressure. Adding a massive long stake on top of that? That's how you get a stock ripping higher by double digits. Now, contrast this with what we learned earlier in the week about Access Industries. They sold roughly 12 million shares of Opendoor, and many pointed to that as a key driver of the stock's brutal sell-off earlier in the week. Access had been involved with the company back when it was trading down near 50 cents per share, so in many ways their exit now clears the deck. If anything, it's healthy. If they were looking to cash out, better to have them out of the way now so the stock can move forward with stronger, more committed hands. And that's where the juxtaposition becomes so powerful. On one side, you've got an old holder like Access stepping out with 12 million shares sold. On the other side, you've got Jane Street stepping in with 44 million shares bought. It's a complete transfer of power. The baton has been passed. And in this case, it's been passed from a passive legacy investor to one of the sharpest quant firms in the business. That's about as bullish as you could hope for. Now let's expand this picture a little more. Because Jane Street isn't the only institutional player with exposure to Opendoor. Take Lennar, the massive home builder. In their Q3 earnings just a few days ago, Lennar disclosed that their stake in Opendoor produced a mark-to-market gain of roughly $71 million. Let that sink in. When one of the largest and most respected homebuilders in the United States is highlighting gains from their Opendoor position, that tells you two things. First, Opendoor is big enough and relevant enough that Lennar actually has to disclose its exposure. This isn't some tiny speculative side bet anymore. It's material. Second, it signals validation from inside the housing industry itself. Lennar has every reason to be cautious, every reason to avoid volatility. But they've leaned into Opendoor, and that says they see a future where Opendoor isn't just an experiment, it's part of the housing ecosystem. Combine Lennar's exposure with Jane Street's new stake, and suddenly the idea that this is just retail versus Wall Street shorts looks outdated. Institutions are here. Big institutions. Some selling, yes, but others buying in size. And right now, the weight of buying looks to be overtaking the selling. Let's also talk about what we're seeing under the surface in the market itself. Today, a user monitoring order flows noticed several blocks of 200,000 shares each being purchased in quick succession. That kind of activity isn't retail. That's institutional level buying. Whether it's Jane Street scaling in further, another hedge fund quietly building a position, or even a new strategic investor, it tells us that the interest isn't slowing down. When you see blocks like that go through, it often precedes further momentum. It signals accumulation. And when accumulation starts, that tends to act as a magnet for others who want in before the next leg higher. Of course, we can't ignore the macro backdrop here either. Just yesterday, we got August housing market data showing new home sales up more than 20% year-over-year. Prices remain strong, with median home prices hovering above $413,000. Those are not bearish housing stats. Those are constructive numbers, and for a company like Opendoor that thrives on liquidity and transaction flow, they matter. Pair that with the Fed signaling rate cuts on the horizon, and suddenly the environment looks a lot less hostile. If housing demand remains resilient, and if rates ease in the months ahead, Opendoor is in position to outperform its own conservative projections. Remember, the prior board gave very soft guidance for the next couple of quarters. If Kaz and the new leadership team execute better than expected, there's upside surprise potential baked in. Which brings me to the cultural reset that's still unfolding inside Opendoor. Kaz Nejatian has already shown he's not afraid to move quickly. From accelerating the national rollout to revamping pricing models to introducing new internal AI tools like Opendoor Assistant, he's setting a pace that the old Opendoor never had. He's also resetting the culture. Ending remote work in favor of in-office operations is one part of that. Recruiting engineers and developers directly online is another. And teasing new buyer-focused products shows that the product pipeline is alive and moving. That cultural reset, speed, efficiency, ownership, aligns perfectly with what institutional investors like Jane Street look for. They want to see not just potential, but execution. And Kaz is delivering that. So where does that leave us as we head into Friday? First, momentum has clearly swung back to the bulls. After 4 brutal red days, we've now had 2 strong green sessions in a row, capped off with a double-digit gain today. That alone is enough to shift sentiment. Second, the shareholder base is evolving. Access is out. Jane Street is in. Lennar remains exposed. Other block trades suggest more institutions may be building. That's a healthier base than what we had just a few days ago. Third, the retail community, the open army, has proven its resilience. And this point can't be overstated. There were plenty of people who panicked earlier this week, plenty who blamed influencers, plenty who wavered. But those who held, those who kept their conviction, those who zoomed out to see the bigger picture, you've now been vindicated. Because today's rally isn't just a bounce. It's confirmation that the long-term bull case is intact. It's proof that institutions are starting to align with retail. It's evidence that the housing market is holding up better than expected. And it's a reminder that Opendoor still trades far below its all-time highs. The upside potential remains enormous. Look, none of this means it will be a straight line up from here. There will be more volatility. There will be more red days mixed in with green. But the direction of travel is what matters. And right now, the direction is higher. So to the open army, well done. You weathered the storm. You held through the toughest days. You endured the noise, the sell-offs, and the doubt. And now, with Jane Street stepping in, with Lennar validating exposure, with housing data supporting demand, and with Kaz driving transformation, the setup has never looked stronger. Onwards and up.